What does a typical margin on one of your bottle of wines run at?
Yeah, so I mean, if you're not running 200% margin or more on the sale of a bottle of wine, you're probably losing money. Just all the time that's going into it, all the overhead that you have.
In order to make this a full-time gig, how many bottles of wine do you need to sell per week, month, year?
So we sell and pour ourselves now. Of course, this is after 6 years, 13 to 14,000 bottles a year.
200% margins on wine, which for those of you who don't know, that's not possible because you can't end up with more profit after the revenue and cost of goods than your original revenue. It's just not humanly possible. And if you figure out, let me know, because I need that for my accounting firm. I think he meant 50%, or I think he meant, so he says he sells a bottle of wine for 30 bucks, right? So I'm assuming it costs him maybe like 15 bucks to make. So he comes out the door with maybe 50% margin, 50, and he says he sells 14,000 bottles of wine per year. So assuming he sells it at 30 bucks, gets a gross margin of 15, that's $210,000, nice, per year. That doesn't include operating expenses, so call it about 20 to 30% typically I'll see in a company. So let's just be conservative and say 30%. That's 63,000 in operating costs. That puts us at about 140 in net margin. You gotta, okay, so you're at 140 net margin, right? This is where most business owners are like, this is amazing, 140 grand in net income. Okay, here's why your profit's lying to you. Because you also need to include, number one, your owner's salary at a fair market rate. 2, you got to save for taxes. 3, you got to set aside a cash reserve. 4, any debt payments on the books that don't impact the profit and loss. And 5, distributions that you're taking out of business that don't impact the profit on your profit and loss. So for fair market salary, for example, if him as the owner is paying himself maybe no salary, or he's paying himself below market salary. So let's say he's paying himself, 30 grand in salary, because the less salary you pay yourself, you're actually saving money if you're an S corporation. If you don't know that, it's called salary optimization for S corps. So 30,000, but really he should be paid a salary of 70 grand for his expertise and skill level. What he's doing in that case, instead of 70 grand, he's paying himself 30, is he's overstating his profitability by $40,000. And that's just one example of why your profit's lying to you. There's a lot of different, the way the accounting is set up for the profit and loss, honestly, it's annoying. Because as a business owner, it doesn't give you the data you need to truly understand the business and the core operations, which is why I need to make adjustments with my clients so they can truly understand where they're at versus where they want to go. And having manipulated data with the way the accounting standards are set up just doesn't help you as a business owner. So overall, 14,000 bottles a day, $15 margin, 210 total revenue, 63,000 in cost of goods, leaves 140. But remember, you've got a lot of different factors in that profit that are going to impact that to tell you if you truly are profitable or are you just profitable on paper.